If you were holding and waiting for the market to come back, so in 1929, the Dow was at 381. It took approximately 24 to 25 years to get back to 381. 1950s, when I was growing up, most of the people who were part of the Great Depression, my parents, and the people who were pounded by the Great Depression and the stock market crash, they were never in stocks. They were so gun-shy of stocks. And then in my generation, the baby boom generation, they brought back this thing called the 401k, defined contribution pension plans and all this, and the stock market took off. So the baby boomers are caught with the proverbial pants down, and now comes the next big crash, which you've been forecasting for a long time, Harry. So what you're saying, this one might be a long one.
Yes, because this is the culmination not only of the baby boom, gigantic, as you were hinting, the largest generation in history. And it wasn't just U.S., it hit globally. To grow up and earn and spend money, which is totally predictable. Average person peaks at 46 for the baby boomers and spending 47 for the millennials today, and then declines. So
what you're saying is that when a person hits 46, that's when they're at the peak earning and spending. And millennials is 47. Is that what you're saying?
Yes, the average person for more affluent people, college-educated professionals, it's more like in the mid-50s. But still, average 46. So baby boomers hit that peak collectively in 2007, something I predicted like 20-some years before that. And guess what? We went down, big crisis, worse since the Great Depression, but not as bad because they printed so much money to stop it. And we've been living on quantitative easing ever since to make up for the slowdown in this generation's spending. That simple. And we're not coming out of it.
So let me go back again. So let's talk to, my generation, the boomers, What would you say to them if they drank the Kool-Aid? Let's say they have a 401k or an IRA, one of those things, a Roth IRA. They've seen their portfolio per se go up, and now it's crashing. What advice do you have for them? I mean, how do they stay in, or do they exit, or hear your advice?
No, you get the hell out, period. I think you may have one more little run left, could be a couple months, could be a couple weeks, because the Fed's pumping in more money than ever with the repo crisis and now the coronavirus. But I think this is the death knell for the stock markets. They can print money to stop a recession, to stop banks from failing, companies from failing, even stocks from crashing too much normally, but they can't stop this virus from spreading, and it just kills business. Businesses stop, people stop traveling, people stop spending. I mean, my wife's not going to even go to a woman's stayover tomorrow night because they're all coming in from New York, and she's, she might get the virus, and she's over 60 like I am, and that's what it hits. It's old people, like you said earlier. So this is something they can't fight with money printing. They have kept this bubble going far beyond when it should have peaked in 2007, and now they've got something that this doesn't work on.
So Harry, I was talking to this young guy. He was he's a laborer. He was painting parts of my house, and he says, I bought a house like you told me to back in 2011. He bought it for I think 100,000, and using round numbers, and now it's 300,000, and he has no retirement. He says, "What should I do?" And I said, "Should I sell my house?" And I definitely couldn't advise this guy. He's probably only 40. He's got 3 kids. He's got a job painting houses. He's got no stocks. You and I are calling for a 25-year possible depression, long-term deflation. What do you say to people? Because he said if he sells his house. I said, where do you go? What are you going to do with that money? Let's say you have $200,000 and you're going to pay capital gains tax on it. What are you going to do? He was clueless.
We are in a bubble era. And the last bubble era we saw was the Roaring '20s. So nobody lived in a bubble before. And real estate was not the bubble back then because you couldn't borrow money so easily against housing. In fact, it was very difficult. So now it's everything. The rule for housing is real quick. Bubbles go back to to where they started. That house, if he bought it at the bottom at 111 and now it's worth 300K, my rough estimate is going to go back to near that level. If he's comfortable sitting through 189,000 potential decline in something he probably has a mortgage against and maybe some home equity lines that he went on deck to, fine. I think anybody with any brains would say, oh, no, I don't want to sit through that one. Oh, and by the way, the demographics, I've got a new real estate model that doesn't just project peak spending like other consumer categories. I have to subtract the dyers. And guess what? Baby boomers are now dying at unprecedented rates and will continue to do so into 2039 or 40. That takes down the net demand, even takes it negative at some point for real estate. So homes are never going to appreciate like they did in this boom, even in the next boom. So it's better, especially older people who are retiring. A lot of baby boomers are realizing they didn't save for retirement because they're living in good times and thought they didn't need to. And now they're saying, oh, wait a minute, though. My McMansion, which I don't need now that my kids are gone, I can sell that, instantly fund my retirement plan, and rent my retirement home. I think that's really excellent advice to do that.
Well, you think that's good advice right now?
I think real estate, my phrase and my newsletters and books, real estate will never be the same, Robert, when for the first time in all of modern history, the next generation has less peak buyers for everything than the baby boom. And in many countries, it's way less, like Japan and Southern Europe and East Europe and places in East Asia. So, there's always been, bigger generations and more and higher mortgages availability and more people owning homes. Well, it's all the opposite now. Millennials don't buy as many houses. They don't buy as big a houses. Oh, they share cars. Well, next they're going to be sharing McMansions. They're going to be so cheap. They're going to be putting two millennial families splitting a McMansion into a duplex because they can buy a McMansion for a little more than a normal starter home, because they're going to crash the most. So real estate dynamics are going to switch. Stocks will crash, go back near new highs somewhere down the road. I don't think real estate will get to these prices ever again. So you better love that damn home if you're going to stay in it. I own nothing except my vacation home off an island off of Puerto Rico because it's a unique property. It's also gone from 25 to 5 acre zoning. And until I get that codified where I have 5 lots, instead of 1, I'd be stupid to sell it because there's probably 40-50% value add just from that. But I don't own real estate. I'd rather rent.
If you're an aging baby boomer and let's say you got $100K inside your 401k, or you're a police officer and you're up to $1 million and you got a home, what advice would you give to the aging baby boomer if now that the boom is about to bust and Harry is calling for a 24 to 25 year depression? So Harry, what advice would you give to that aging old guy like me?
If you're an aging baby boomer, you own the most real estate, more than most millennials, a bigger house, and have more equity in it. That equity is your treasure chest. I would sell, especially a larger house, either downsize, now that you're just a couple and don't have a kid because you're older, into a smaller house, or better, like the smartest baby boomers, rent that house in retirement. It's more flexible, lower cost anyway. And now you got a treasure chest to add to your 401k or pension plans or whatever retirement plans you have, and to take advantage of the greatest crash in history, which is going to bring stocks, real estate, and most assets down to levels you can buy long-term and make really strong returns again. You cannot make strong returns now, even if we don't have this crash I'm talking about. The best stock models say at these valuations, you're going to lose 2% a year over the next 12 years without my scenario of a crash of a lifetime.
That's my question. So, given this coronavirus and if terrorism going down, is it safe to shop at Walmart now? No,
coronavirus is just starting to hit. It has peaked out for now in China. It's just starting to hit. Guess where it exploded? Know where it exploded the most. Not in Vietnam or Southeast Asia or Philippines, other places around. It's more Korea and Japan, and now it's in Northern Europe, particularly Italy. What do Italians do? You ever been around Italians? They don't just shake a hand or give a little peck on the cheek. They give a big peck on each cheek, and then one right smack to the lips, and having the highest death rates because they have such high human contact naturally. But it's the colder climates. This virus likes cold. It doesn't like warm. I think this gets worse. There's no question. This is going to get worse.
Yes, I agree with Harry. We're going into a depression, and he thinks it's only going to be a short one. But I count the crash from 2020. He counts it at 2008.